Well, I expect most of the AI companies, the American ones, to go bust.
Wow.
And we will see, I think, maybe 1 in 10 of the companies surviving.
The Chinese are the winners.
Yeah, and they're not necessarily behind the Americans either. I wouldn't like to be an investor in AI right now, let alone somebody who started one of these companies.
美国砸下万亿美元豪赌人工智能，结果中国一家公司发布了个更便宜、更开源的模型，整个华尔街差点崩了。英国主持人尼尔请来伦敦大学教授基恩，两人得出让硅谷几倍发凉的结论：美国人工智能公司估值是中国对手的10到25倍，性能却只领先不到2成，成本却是10倍。更可怕的是，这场万亿豪赌的钱大量来自私人信贷，3万亿美元规模，几乎不受监管，藏在资产负债表外，像极了2008年次贷危机前的影子银行。
The scale of US investment in AI is eye-watering. It propels economic growth in America. It leaves Europe in the dust, but not. Indeed, US AI stocks are starting to shake a little as the Chinese threat starts to materialize. This month saw the release of K3 from a Chinese company called Moonshot. It's a powerful AI model that's cheaper than many of its US rivals. But all is worrying AI in America. So this week, the Andrew Neil report is going to take a deep dive into the challenges facing America's AI revolution, debt and energy. Then speak to Professor Steve Keen of University College London and a global authority on such matters to get the measure of the problems. Let's start with perhaps the biggest threat to American AI companies is that they're undercut by cheaper, what you could call commoditized AI from the likes of DeepSeek. That would really threaten the implicit pricing models behind today's equity valuations. They wouldn't be able to charge the prices they hope for their services, which are propelling the size of the valuations. Now, if it's true that, for example, DeepSeek V4 can achieve 80 to 90% of the performance of Anthropic's Claude at 10% of the cost, then you can see American AI has a problem. And let's just look at the current valuations. Let's start with two biggest. Moonshot AI, that's valued around $31 billion. DeepSeek, that's valued around $71 billion. A lot of money. But look at the two American giants. OpenAI, valued at $852 billion. Anthropic, valued at $965 billion, almost $1 trillion. So this means that US AI firms are currently valued 10 to 25 times more than their Chinese competitors, despite similar capabilities. I think that's what's known as systemic risk. So much for China. Then there's the financing problem. Now, a recent study by Nikkei, the Japanese stock exchange, revealed that 5 US tech giants have hidden off-balance sheet debt of $1.65 trillion, much of it accumulated via what's called private credit. Now, the opaque financing of AI investment by private credit sources, they're not banks, they're not bonds, it's not equity, but various sources of largely unregulated credit, that's a potential threat not just to the expansion of AI, but to the wider financial system. Now, some fear that the next financial crash will be caused by a meltdown in private credit, bringing AI investment down with it. Now, nobody even knows just how much private credit there is in the AI investment boom, just that there's a lot. Private credit as a source of investment finance has grown since regulations following the great financial crash of 2008. They put greater restrictions on bank lending and other forms of finance. It's essentially private credit a way around these regulations. Even the banks are now lending via private credit vehicles. Private equity and private credit are intimately intertwined. Now, by early 2025, it was reckoned that private credit lending to the technology sector in America stood about $450 billion. That was up $100 billion on the year. It's probably doubled since then as the AI spending boom has gathered speed. Now, one of the risks is that private credit is so deeply embedded in loans to software companies, perhaps as much as $500 billion a year there. And yet these are the very companies thought most at risk from AI, which can develop its own software. So the more private credit invests in AI, the more it might be undermining its previous investments. The global private credit market is now estimated to be over 3 trillion. We don't actually know how much. That's because of the lack of transparency. But it's a lot. And some estimate that outstanding private credit to AI firms will be at least 600 billion by 2030. Now, of course, private credit is only one source of finance fueling the AI boom. Corporate bonds, banks, equity, other sources have put in even more. But the fear is that private credit is the most vulnerable if AI doesn't start generating the revenues that will be needed to service this debt and pay it back. As Nikkei discovered, private credit is most often involved in off-balance sheet joint ventures, special purpose vehicles, and the like. Somewhat shadowy financing mechanisms, often first to combust when things go wrong, bringing down not just AI, but companies throughout the whole financial system. And what could go wrong other than, well, there might not be enough energy to power all these AI data centers springing up, even in energy-rich and energy-cheap North America. Hyperscalers, chip makers, large AI complexes, they now have a valuation at a jaw-dropping $20 trillion. And that is predicated on a quick and massive build-out of AI infrastructure to generate the revenues, to justify the investment, to pay back the debt, service the debt, above all in data center hubs. But the electrical infrastructure needed to sustain these hubs, well, it just isn't there, and it won't be anytime soon. Start with the fact that the US power grid hasn't been upgraded since the 1970s, and it's an immense job to begin now. And the lack of energy isn't actually the primary problem. It's the global bottlenecks of transformers, substations, switchgear, transmission lines needed for that upgrade, plus the acute shortage of skilled labor in the United States to install and run these things. Now, the data center appetite for power and water is insatiable. People don't realize just how much. Let's just take the hub, the data hub at Hays County in Texas. It's a good example. Texas, of course, you don't get more energy rich than that. But that hub can use up to 10 million gallons of water a day for cooling and power generation. And in the process, it's depleting what's known as the Edwards Aquifer, which is essential to the Austin-San Antonio corridor. You can't do both. You can't keep the water running to the people and give AI all the water it needs. Now, this electricity crunch may well be the biggest danger to AI of all. The data companies, let's stick with Texas, because as I say, you don't get more energy energy intensive than that. Data companies have asked the Texas Power System Operator, it's called ERCOT, for grid connections to 200 projects in the years ahead. Now, that's a total request amounting to 446 gigawatts by 2023. Let me just put that in context. It's 5 times the current peak power for the entire state of Texas. It's 13 times the UK's average use of power for the whole country. Now, expansion on this scale and on this timeline is simply impossible. So massive investment is taking place in AI infrastructure that won't come on stream for years because of power shortages. Now, think what that will do to cash flows. Now, of course, hyperscalers, they can build their own generating plants. They've got a ton of money. But that can't happen quickly enough to reduce or service the fast-mounting burden of opaque AI debt. Let's look at the new Vogtle nuclear power plant in Georgia. Georgia being an area where a lot of data centers have been built. It took 7 years from conception to operation for that nuclear plant. It's not just the British or the French that are slow at building. Costs more than doubled from $12 billion to $30 billion. So that's not a quick way forward. Okay, I hear you say, what about small modular reactors, the SMRs, Rolls-Royce being one of the world leaders? Fair enough. But none yet exists or operates in the West. None is likely to come on stream much before the second half of the 2030s. So that isn't a way out either. What about these amazing US frackers? Look at the oil and gas they've got out of the ground, particularly in Texas. They can frack till they drop. But that's no solution if you get the gas out of the ground, but there are no gas turbines to generate the electricity. The waiting list for heavy-duty turbines used in combined cycle plants is now 7 years. Some hyperscalers are trying to jump the queue using the deep pockets to get ahead of the game, but with limited success. 90% of gas turbines worldwide are dominated by 3 companies: Siemens, Germany; GE Vernova, America; Mitsubishi, Japan. Japan, of course, as it does in most things, has tried to replicate these gas turbines. But it isn't easy. They found it difficult to develop complex metal alloys needed to withstand temperatures of 815 degrees centigrade. So the triopoly, if I can call it that, it has boosted combined global production of turbines to 45 gigawatts. That's way below AI energy demand. They're not inclined to invest in more capacity. They fear an AI bust and they'll be lumbered with excess capacity. Plus, they're already making a fortune from the premium pricing of gas turbines. So the companies in the vanguard of AI, the technology of tomorrow, might be most at risk from an old-fashioned energy crunch. Private credit, energy shortages, each one separately, or all 3 taken together, could stop the AI revolution in its tracks. Not so much the technology. I think that's here to stay, but the companies behind the technology. And we've been here before. Every new technology sees its Praetorian Guard go bust, even while the technology marches on. The great railway bust in America in the 1870s, the electricity revolution at the end of the 19th century, the rise of aviation in the early part of the 20th century, the dot-com collapse at the very beginning of the 21st century. Each saw companies in the vanguard of that new technology of the day go bankrupt, often causing financial meltdown in their wake, even as the technology itself powered on. In the immediate years ahead, that is now the risk facing those in the forefront of AI. It isn't just a problem for them, it's a problem for all of us if they bring down the financial system in their wake. So hold on to your hat, keep out a wary eye. We could be in for a bumpy ride for the rest of the decade and into the 2030s. This is the Andrew Neil Report. Let's speak now to Professor Steve Keen. He keeps an eye on all these matters. He's at University College London. Professor, thank you for joining me. If I can, let me start with China. What is your overview of where we are with this Chinese-American competition in AI?
Well, it's interesting in that what's done is prepare the ground for something like AI before AI actually came along. So has rebuilt an enormous energy transmission system throughout the country. We're using 800 volts rather than 400 volts, which has technologically means you have a higher amount of capacity to push energy from one part of the country to another. And what it means is that people in basically take energy as something which is going to be available almost whatever you do with it. America's still stuck with the old 400 volt system, a volt system. They can't transfer power easily, and therefore they get these energy shortages in places like Texas, as you're explaining. So in some ways, the ground for the demands of AI before AI came along. And then a major part of the entrepreneurial side of industry, which is massively underestimated by America, has focused on reducing the costs of doing the processing involved in running these AIs. So the basic story is there's enormous amounts of multiplication, matrix mathematics going on to enable these machines or data systems to communicate with you as if you're talking to a human. And the calculations themselves are immensely expensive in terms of energy. You've got some of the models involving, let's say, they take 2 trillion parameters. That's 2 trillion numbers that need to be multiplied against each other multiple times to converge on some advice to you on whatever you're looking at, whether that's how to send up your father-in-law in a birthday card or how to solve an unsolved conundrum in mathematics. So So the energy needs are enormous. And what the Chinese have done as well is say that this is something which should be open and available to everybody rather than restricted and only available to people who purchase a particular proprietary system. So they're going open source. And that's one of the major challenges of Kimi. You can actually see what the parameters are. You can potentially load it on your own hardware. You don't need a data center necessarily, whereas you do for the American systems. So I think at a global level, it's the Chinese who are set up to win this contest. And of course, that's not at all what the American entrepreneurs who dived into AI thought was going to happen.
Indeed, and it's not what's behind the valuations of AI companies in America either. Yeah. Just before I move on other Chinese issues, just to be clear, it's interesting what you said there, that the kind of energy constraints I was talking about in my monologue that AI in America is about to hit, by and large, you're saying they don't exist in.
No, that's right. The higher volt. This is again one of the advantages of by engineers rather than economists and lawyers. And I think that's the reason why everybody in the Politburo, not everybody, but the vast majority of engineering backgrounds, they're aware of the advantages of different transmission systems in a way that somebody who's done an economics degree, a PPE course, has no idea. And then they'd say, well, we need energy for an advanced economy. How do we distribute the energy more easily? We need to go to higher voltage, and that's what they've been doing. So the energy has been built there as almost a matter of course. And then when you talk to Chinese entrepreneurs, they don't worry about the availability of energy. Water is a different story, but they don't worry about the availability of energy. So that combination, having the available energy to start with, and then producing systems which don't need the same amount of energy in terms of data centers, gives the Chinese an enormous advantage. And the Americans, I think that you're finding out what happens when you have a centrally planned versus a non-centrally planned system. And in this case, the central planning means the energy is already available, where it's not there for the disaggregated American system.
In general, is it true to say that although the American AI systems may be more sophisticated, that the Chinese AI models are much cheaper and have 85-90% of the capacity of the most sophisticated American models? So if you combine cost with capacity and capability, the Chinese are the winners.
Yeah, and that's it. They're not necessarily behind the Americans either. There's a lot of extremely clever engineers, often did their PhDs in America and went back to they're outstanding intellects, and a lot of it is how do you manage to do these matrix mathematics more efficiently? How can you cut down the load? Where do you get points where there's overkill versus where you can stop and get most of the answers you need? And therefore, if you do that, you get more time to actually train the results, and you get higher quality results. So the Chinese have out-innovated the Americans. In some ways, the Americans have done what they seem to do as a species. That is, they use brute force to overwhelm the rest of the world. The Chinese have used intelligence rather than brute force this time around.
So what is the likely American response to be? I know that the Trump administration has tried to limit the export of some of the most sophisticated chips which at the most sophisticated level does not produce itself. It does need these imports. But am I right in thinking that nothing America has really done to try and dampen the Chinese AI projects has had much of an impact?
No, in fact, in some ways, it spurred the Chinese to innovate more. So, for example, the bans on chips meant not being able to get machinery from AMSL to build chips in their own country, whereas they sell those to and then they've on-sold to America. This has forced the Chinese to innovate different ways to produce very low micron chips to give enormous amounts of processing power in small bundles. So the bans have actually encouraged innovation by the Chinese. And I think in some ways, I think this has got a historical parallel because every Chinese school student learns of the Opium Wars, learns that they were effectively raped by the West, that they can't rely upon, they can't trust the West. And so anything like putting up a barrier saying you can't have this technology actually inspires the Chinese to say, we'll replace it ourselves and become self-sufficient, because our mistake in the previous times was to lose our self-sufficiency against the West.
Reuters has been reporting this week that talks are to begin between and America on AI, the American side to be left by the Treasury Secretary Scott Bessent. Is that likely to lead to anything, or is continued competition between the two superpowers of AI just likely to continue?
I doubt it, because with the Chinese, and the EC even made a speech on this front just recently, they want it to be open source. They want this stuff to be publicly available, effectively treat AI as a public utility, not as a source of private profit. Now, when you do private profit, you make everything proprietary. You try to restrict what's available, and that's what the Americans have done. And in a typical, you mentioned the railways boom beforehand, a typical boom and bust cycle in capitalism, which Schumpeter explained extremely well. All the firms go in thinking they're going to be the dominant party. So you get massive overinvestment. The overinvestment extends the technology through a whole of society. When the technology comes out, it starts undercutting and destroying other previous sectors. So, of course, railways destroyed carriages in that sense. And then the technology permeates society when the bust occurs. Now, I think we're close to that point. It will permeate through society after a bust occurs. But the scale of that financial bubble, as you were saying, in America is absolutely enormous. So these Americans are in a desperate situation. Their costs are sometimes 10 times their revenue. They're running up massive losses. They think we've got to make sure that we get the revenue that's going to come out of this when the crash occurs. I think they're seeing the inevitability of a drop in the price of tokens coming up at some point. So they're trying to make it proprietary. And in that sense, what you've got is the Chinese are fighting for making this open and available to everybody. The Americans are trying to restrict it for their own benefit. The Chinese can just keep on going. They don't have to cooperate. So I think ultimately the only resolution for this is the one the Chinese want, where AI becomes a public utility provided to everybody, and it's open access rather than restricted and privatized.
Is the problem that now faces American AI? One of the major problems is the valuations we currently see, typically hyped up, almost like the valuations of a bubble.
Yep.
But they are predicated on when this is up and running and we're in the market, we're going to be able to charge an arm and a leg for this wonderful technology. But it didn't take into account that they are likely, or could well be, undercut when it comes to price by the Chinese. And therefore, if that's the case, the pricing models holding up these valuations, well, they collapse, do they not?
They're going to collapse. I completely agree. And if like a factor of 10 fall in the costs and the pricing is quite likely. And I saw one commentator saying that a lot of those data centers are going to turn into pickleball halls at some point.
They might make more money out of pickleball. It's very popular these days.
Be more fun, at least, anyway. But yeah, I think this is a huge overinvestment. It's what typically happens in any transformative technology coming in. There will be overinvestment, first of all, and a boom and bust caused by that cycle. But what's going to double this up is, as you mentioned, private credit. Now, a lot of this, people think private organizations give money to somebody else, money that already exists. That's less dangerous than if those private credit have then taken the money they've pooled and then gone to a bank and levered it up. Now, most likely they have done that. We're not getting any transparency on that at all. So as well as the amount of money is vaster than is actually being saved to be reinvested by the Microsofts and the Facebooks and so on. And it's also been levered, and that's exactly what gave us the global financial crisis, excessive private sector leverage. So we're getting that again, plus a huge scale bust, and at the same time as the unavailability of many of the physical inputs that are necessary, the Strait of Hormuz affecting the supply of sulfur dioxide and therefore of copper for cabling inside these data centers. So it's in many ways it's the biggest transformative technology challenge we've faced, coming at a time when the availability of resources to produce the ordinary goods and services we expect are themselves in challenge. So I wouldn't like to be an investor in AI right now, let alone somebody who started one of these companies.
I can understand that. And I want to come on to the financial risk and financial consequences in a minute, because that is my next big topic. But before I do, let me just finish off on the dynamic. If everything you say is largely true, But also, I guess one should never underestimate the resilience of American enterprise, its ability to adapt and to go in different directions. It's very agile. But even taking that into account, where do you see things going in the next couple of years with AI into the next decade, let's say, given the dynamic that you've just outlined for us?
Yeah, well, I expect most of the AI companies, the American ones, to go bust because
Wow.
the difference between their revenue and their cost is huge. 5 to 10 times, cost being 5 to 10 times revenue. Remember the internet bubble. You and I have
Sure.
obviously lived through that one. And you remember pets.com? And I think it was valued at more than the entire pet industry in America. Amazon was valued at more than the transportation, the airline systems. Evaluations get crazy and then they crash after the putting in the technology transforms society, but doesn't lead the profit that the initial people who rush in expect. So we're getting that on steroids this time round, and we will see. I think maybe 1 in 10 of the companies surviving. But the wild card, as we're discussing now, is that there's another country that's in this game in a way that America hasn't experienced before. So when the telecommunications bubble or the internet bubble occurred, it was exclusively American technology doing it. This time round, they've done it. They've overinvested. They've overborrowed. They're levered. They're going to crash. And on top of that, they might lose all the competition anyway.
Let me move on to the whole financial implications of what's going on. Put aside, let's supposing there wasn't a problem to worry about. But that all, so let's freeze that for the minute and isolate the American AI even within its own ecosystem. This massive, this multi-trillion-dollar investment in AI and associated technology and technology companies, of course, like all these things, is being done on debt. And particularly the new kid on the block compared with previous decades is this thing called private credit, which, I think 4 or 5, 6 years ago, most of us didn't talk about at all. It's become a new thing to take into account, even if it was there before. It's now at scale. I emphasized in my monologue that the private credit itself was a potential systemic risk in the financing of American AI. Do you agree with that?
Absolutely. Like, this is why we ignore the private sector. We get paranoid about the level of government debt and never look at the level of private debt. Now, I'm the exact opposite. I have come from the perspective of what's called Hyman Minsky's financial instability hypothesis, and that argues that it's the dynamics of private debt that cause booms and busts, and the government sector basically picks up the pieces afterwards. And that's why I saw the global financial crisis coming, because I looked at the level of American private debt. It was already about 150% of GDP. In 2005, it was growing at up to 16% per annum. I said that rate of growth can't be sustained. When it turns negative, there'll be a financial crash, and that's what's happened. So private credit coming from banks at that stage went from being plus 15% of GDP in 2006 to minus 5% in 2009, and that 20% of GDP turnaround in bank-created credit is what caused the global financial crisis. Now, what you're talking about here is that a lot of large holders of large amounts of money, so the Microsofts and the Facebooks with enormous cash reserves, they've then pulled that into their own distribution of private credit, and they're lending out money that they've had idle, in a sense, on their bank balances. That itself is not as dangerous as bank money because you're not creating new money. But I'm sure, knowing how the financial sector behaves, they saw a potential profit. They probably levered up the amount of money that has been saved by these institutions. And so the amount of money might be 3 or 5 times what we're seeing in terms of the private credit pools because of the leverage from bank loans as well, which are likely to be off-book vehicles, so you can't actually see them in the recorded data. So we're going to get a triple whammy: overvaluations that mean you're going to have massive bankruptcies, and the bankruptcies cascading through the financial system, the loss of the money that these huge companies have poured in. So the Microsofts and the Facebooks will find they haven't got the cash reserves they used to have. They'll try to find some way to recuperate those, and the loss of money that's going to come out of this, the bankruptcies. that'll flow through the system as well. So we are facing a gigantic financial crisis. And again, it's being made even worse by the Strait of Hormuz and everything that's happening in the Middle East.
Yes, indeed, which drags everything down. Although private credit is opaque, and as you say, it's off balance sheet, it's in these special purpose vehicles, which are quite hard to be able to penetrate. We are right in thinking that although it's not a majority of the debt going into AI, it is a big enough chunk if it goes sour to cause problems. That private credit is a big player in the expansion of AI.
Absolutely. And again, it's the enthusiasm. This is part of what capitalism's vitality comes from, the things that also cause its crises, because people see a potential enormous profit, and everybody who sees it dives in, and they get funding, then others get funding in the same area. So you get massive overinvestment as a natural part of the way a capitalist economy functions, and then you get a slump in the aftermath. So that's the standard picture. Schumpeter covered that brilliantly back in 1907 in his theory of economic development. That's the best explanation for this boom and bust cycle in technological innovations and capitalism. But we're added to it again because we have an enormous level of leverage of the private sector with private debt that was built up in the subprime bubble and the telecommunications bubble and internet bubble before that. So the high level of private debt, we already had fragility that way, because to service your private debt, you've got to be making a sale out of cash flow. Now, if your cash flow is negative, which is the case for these companies, you've got to go back and borrow again to remain in business. So all these things mean we've got a Schumpeterian downturn on steroids hitting us with the AI sector. And the ultimate winners, as you say, potentially being other than America. There's going to be lots of bankrupt billionaires in America coming out of this.
Now, we talk about the opaque nature of private credit, and it certainly is, but it's not entirely opaque, Professor, is it? We do know, I think, tell me if I'm wrong, that it actually comes from institutions that we know very well. It actually comes from banks. Banks have been using it as a way around the regulations. Private equity has been involved in it as well. You mentioned it. See, Microsoft and other companies are going in through putting their money in through the private credit route. There's a kind of doom loop blowback danger here, is there not?
There is, and this happens all the time. This is one reason I emphasize we have to study far more the private financial system than we do with the government financial system, because it's the private financial system that leads to these booms and busts. And by ignoring that, mainstream economics completely ignores private debt. By ignoring it, we're not seeing what actually causes the real booms and busts. And this is a bit like a wake-up call coming along saying, hello, you've been ignoring me for 100 years. See if you can ignore this one.
Well, of course, we always think we can, because as we always know, this time will be different.
Hope springs eternal in the human breast. You know that wonderful line? And and capitalism amplifies that, which is one of its great creativities, but it also has the great downside. And that we need to manage the financial sector and not allow these booms and busts to be as extreme. And when we obsess about government debt and don't look at the private sector, we take our eyes off what really matters. So I hope this is a wake-up call to people to say, take a look at the level of private debt, both what the banks do and what private non-financial institutions like the very well cashed up, well, once they were well cashed up. Now they've blown all their money. So the cash might get distributed, but we're going to see so much of a wreckage as a result of it.
So you and I can sit here and we can see the structural imbalances. We can see the risks. We can see the perhaps dark clouds gathering on the horizon. And you saw that in the run-up to the great crash in 2008. Others saw it with the dot-com boom. People saw it even with the great railway crash in 1873. Yep. But we saw it in the run-up to 1929. But
that's right.
But what triggers it? What causes there? I can see the dark clouds. What causes the thunderstorm? Talk us through how this manifests itself.
That's good question. Mainly it is that you take on debt, and therefore you've got to service the debt to be able to remain in business. So when you're building the data centers and laying out the systems and so on, you don't actually have the cash flow yet. And so you've got a timing issue. Can you get the cash flow to the level that make your investment profitable before you accumulate too much losses in the meantime? Now, what happened in every of those bubbles you've mentioned, the time element broke. So like in 1929, people don't realize, but the downturn in private credit base demand in America began in 1927, 2 years beforehand. So suddenly the cash wasn't turning up to finance all the share market purchases. People were running up losses, servicing their margin debt at the time. They could get away with it until suddenly people were forced to sell, and then bang, when some people are forced, the whole system cascades and collapses. So we really need to have a overview of the financial sector and not let these bubbles get as extreme. And what happens after every one of these crises, mainstream economics comes out and basically sort of tells us, don't worry about private debt. Get obsessed about government debt as well. We take our eye off the private sector, and they do the same damn thing again, because hope springs eternal in the human breast, and the bankers all dive into exactly the same obsession at the same time. One of my best friends in this whole area is an economist and financier called Richard Vague. I'd love you to have a talk to Richard as well. He was a banker in the 1980s in America, in Texas, and saw the massive investment in oil rigs at the time. And then when all the banks did it, the oil price collapsed from $40 to $10. His bank collapsed. He bought out the consumer wing and became a very successful banker. And he said, this obsession of driving into what's currently hot is a natural thing for bankers. And unless we restrain it, we're going to continue getting booms and busts.
I'm going to ask you, it's probably an impossible question, but I'll ask it anyway. When does the bubble burst?
I'd say the next 2 years. I can't be more precise than that. You can say it's inevitably going to happen, but as to when, timing is always the hard bit. But certainly I think the next 2 years it's got to come crashing down.
And when you take together the competition, the threat, if I can put it that way, the private credit risk we've been talking about, the energy crunch that will probably stop a lot of even if they've got the money, will stop these data centers from coming online. Add that all up, it's a kind of triple whammy of bleakness, is it not?
It is. And the fourth weakness being the ridiculous war in Iran and Ukraine, for that matter. We're damaging our physical facilities at the same time as we're causing a financial bubble. So that's what actually worries me in many ways, more than just the AI in terms of the most immediate crises we face, because we're destroying so many of the channels of producing goods and services that are necessary to service the debt that private enterprises have. So there's going to be a whole range of companies who suddenly can't sell the products they need to sell to service their debt, and we'll get bankruptcies popping up all across the system, and they're going to precede what happens with AI.
You're quite right to emphasize what's going on in the Gulf. The war is not coming to an end anytime soon. The Strait of Hormuz is closed again, effectively, to shipping. It's been a kind of slow car crash on the world economy. If you take what we've been talking about, AI, and this continued threat to the global economy, the prospects for the global economy, which in some ways have proved quite resilient since we came out of the pandemic, the prospects as we approach the end of this decade, it sounds to me from everything you're saying that the global economy is heading for some trouble.
Certainly. And I expect famines as well as just economic downturns to come out of this crisis, because we've cut off, almost 1/3 of the world's fertilizer supply as well. So all these things are building up on us over time. And what has stopped them manifesting them immediately is that we had reserves elsewhere that could be depleted while the flows of goods were stopped. Now those reserves are heading down. Now rebuilding its oil reserve, which is the biggest on the planet. So that means we're likely to see the flows cut out. And when they do, the system, it's like suddenly you run out of lubricating oil in your engine. And that's one thing we are going to run out of. Bang, the engine seizes up. There's nothing you can do about it. So I think we're facing a time like that. And it's as scary as hell, because there was no reason for this to occur in the first place. These are two effectively wars of choice that have accelerated the decline of the physical capacity of our economy to service its financial obligations.
美国人工智能公司市值飙到20万亿美元，结果连电都用不上。德州数据中心每天喝水1000万加仑，电网扩容需求是德州峰值的5倍，变压器等待名单长达7年。基恩冷补刀，中国早就铺好了800千伏特高压电网，人工智能对他们来说像自来水一样自然。更讽刺的是，金融3重绞杀，估值崩溃，巨头现金蒸发，私人信贷杠杆连环爆破。基恩预言未来2年必崩，而且这次和互联网泡沫不同，当年美国技术独霸全球，崩盘后技术仍留在美国，现在是中国同台竞技，美国崩盘可能同时输掉赛道。基恩搬出历史规律，资本主义每次技术革命都伴随过度投资和泡沫破裂，铁路、电力、互联网无一例外， 当问什么会触发崩盘时，基恩的回答令人窒息：不需要特定触发点。1927年私人信贷已经转向，2年后才崩盘，时间到了，链条自然断裂。压垮骆驼的最后一根稻草可能是中东，霍尔木兹海峡关闭，全球1/3化肥供应中断，发动机突然没了润滑油，轰的一声全完了。美国把人工智能当成私人利润的痉挛，中国把它当成公共基础设施。美国用蛮力砸钱堆算力，中国用知识优化算法。